Welcome back to Squawk Box. Rick Santelli here, live on the CME floor. Breaking news, our second quarter current account balance, which we know is a deficit, expected to be about $127 billion and change, a little bit higher, $128.2 billion. In the rearview mirror, though, we do get a revision that puts a little bit more red ink into the equation from 130.4 to now 136.2, rather sizable. Now, in our September read on Philadelphia Fed Index, of course, this is always a trader favorite, expecting 10.5 to 11. Better than expected, comes out at 12, and 12, well, last month it was 16.8, so we've had a lot of nice numbers here. As a matter of fact, there's only been one negative number going back a long time, and that was in February when it was 4.9. He had to go all the way back to 2016, mid-2016, to find a negative number. Why do I bring that up? Because this is holding in really well. Now, for those who love their Thursday numbers, initial jobless claims, we are expecting a number around 2.0. Well, actually, 212 was what most were looking for. 208, less than expected. So 208,000, that makes it officially up 2,000. Last week's 204 ends up as a revised 206. That is a pretty darn good number. It's always impressive on these weekly claims. And finally, if you look at continuing claims, always 1 week in the rearview mirror, 1.661 million. And that's a bit less than our last look at 1.67 and a half. Becky, pretty decent data. The current account balance, of course, probably affected by a variety of issues with regard to trade. Interest rates, they're about the same place they were yesterday, right around the announcement, maybe a little bit higher. Curve flattening seems to be something we're paying attention to. Back to you.